I'm very pleased actually that we've been able to announce good interim results for the half year to June. Highlights for us are underlying earnings are up, even despite sales being slightly down. Production discipline being maintained, so we are well in line to meet our production guidance. And I think the reason underlying earnings are up is there's been a strong focus on costs, cost containment and profitability being driven. So I think we've had a very good first half to the year. So some real highlights for us in the upstream side of the business, where we continue to push on with our investment in future production around the world. We were thrilled to launch the MV-SS Nuyoma in Namibia in Wolfish Bay in the first half of the year. This is the largest and most sophisticated exploration and sampling vessel ever built. And it's a wonderful illustration of collaboration between a number of players. Firstly, Debmarine Namibia, the owner of the vessel. Secondly, De Beers Marine in Cape Town, largely the technology provider. And thirdly, our government partner in Namibia, the government of the Republic of Namibia. Gachakwe, we reached a major milestone. The world's largest new diamond mine over the last 13 or so years reached full commercial production in March. And there's been great work done by Kim and the team at Gachakwe since then in order to overcome some of the early winterization challenges which we overcame. Cut 8 at Botswana, the big investment at Jwaneng, continues to do very well. We've already had some ore now from Cut 8, and we're still well on track for the main ore to come from Cut 8 by 2018. And Venetia, our flagship expansion project in South Africa, the underground project continues to go well. We're likely to get underground by about 2023, and as we know, that will extend the life of the Venetia mine until the mid-2040s. We've also made considerable progress at Venetia in the open pit, where we started the year with the mine slightly out of kilter, and a lot of work's been done at Venetia in the open pit to get the mine much more back in kilter. So the operations have performed very well in the first half of 2017. So GSS, the core part of our midstream business, had a very good first half to the year. We sold a lot of carats in the first half of the year, including selling a number of very, very low value, but a high number of carats in the first site. So that was pleasing to get the stock more in balance. And we've had actually a very good year in the GSS business in the first half. Auction sales continues to drive ahead with its pioneering pilots that it tries. In the course of the first 6 months, we launched our first ever fixed forward contracts where customers can effectively price forward deliveries of diamonds, which is very innovative. And we continue to innovate there. We've launched a number of polished pilots. So we've auctioned some polished diamonds that we ourselves produced, and we've auctioned some other parties' polished diamonds. So auction sales continues to drive ahead with tremendous innovation, and we'll see more of that in the future. So great developments in the downstream. We were thrilled to announce the acquisition of the other 50% of De Beers Diamond Jewelers from LVMH in March this year. This means we now own 100% of our high-end retail business, De Beers Jewelers, and 100% of the De Beers name. Currently, a lot of work is going on integrating De Beers Jewelers into the De Beers family, and that work is progressing well and should be complete by the end of the year. Forevermark continues to succeed. Doors are up by another 11%. We're in just under 2,100 doors across the world and in 27 or so markets around the world. Forevermark inscribed its 2 millionth diamond in the course of the 6 months. And very pleasingly, it took us half the time to inscribe the million diamonds between 1 million and 2 million diamonds than it did between when we inscribed our first diamond and got to 1 million diamonds. So we see some interesting trends in demand in the first half of 2017. Firstly, China and India are both up on 2016, the comparable periods, which is pleasing. China is showing some signs of growth, and that's very pleasing because it remains such a core market for us. India considerably up on 2016, the comparable period, although the 2016 comparable period was a difficult period for India, but India is showing nice signs of growth. The US, our main market, I think there is still signs of positive growth there, a little bit more patchy maybe than China and India. We see some of the major listed retailers struggling a little bit through the course of the first half of the year, but a number of high-end independents reporting very, very good sales. So we think that the first half will be broadly positive, which is good, and we would say, as we always do, that we're cautiously optimistic about the second half of the year. You know, we did an interesting piece of work on consumer buying patterns around the world and self-purchase. So self-purchase is becoming a much bigger part of diamond jewelry consumers' buying behaviors than before. And that, of course, for us is a wonderful opportunity because it opens up a great big market that maybe wasn't there 10 or 15 years ago. And just to put that in perspective, we know that 30% of all self-purchases are made by millennials. So millennials are buying diamonds in large numbers. As I've often said, they do buy them differently, and they have different things they think about when they buy diamond jewelry. So we all need to think differently about that. But actually, pleasingly, they are big buyers and they are big self-purchasers. So for us, an opportunity as long as people do things in a smart and different and innovative way. Another key piece in the driving of the second half of the year's sales is a considerable step up in investment in marketing by the De Beers Group. And we were thrilled earlier in the year to be able to announce that the Diamond Producers Association, which is an association of all the diamond producers, has agreed to step up considerably the amount of money it will spend, firstly in the US and India, on generic marketing from about $12 million to $60 million. $12 million last year, 2016, to $60 million in 2017. We are, of course, a core part of the Diamond Producers Association, but it's great to see a considerable step up in marketing paid for by all the producers, and we're very hopeful about the positive impact of the Diamond Producers Association going forward. So at a macro level, and obviously consumer demand is very influenced by macroeconomic developments. There are, of course, things we have no control over and things that we do have some control over. We would say, all other things being equal, that there should continue to be cautiously optimistic growth in the second half of the year. As I said earlier, we're hopeful that the Diamond Producers Association and the De Beers marketing campaigns outside of that stimulate polished growth in the second half of the year going into the Christmas season. In the midstream, I think we will remain cautiously optimistic. We had a good first half of the year. I think it's likely that we will continue to have a good second half of the year. But there's no reason for people to get carried away, and I think it means we all need to be very, very focused, as we always are, on costs and on productivity, because those are things we have real control over. Well, I think for me, the most important thing for the last 12 months has been teamwork. I think there's been a tremendous amount of teamwork across the whole group and all our producer businesses around the world, where people have really pulled together to help overcome, some of the difficulties that the world currently faces and some of the challenges that the diamond industry faces. So for me, that's the first thing. The second thing has been innovation. I think there's been a huge amount of innovation and pushing the business forward. Auction sales, we've created De Beers Ventures, which is a small business which encourages young entrepreneurs to bring us potential ideas in the diamond industry. Things like the technology on the SS Nuyoma have really the ability to step our business forward tremendously. So I think there's been great collaboration, but there's also been great innovation. And for me, those are the themes going into my second year at the